President Obama taking aim today at boosting home ownership by proposing an overhaul of the nation's massive mortgage market. His targets? Longtime political hot potatoes, mortgage companies Fannie Mae and Freddie Mac. Diana Olick joins us from Washington with more on what this all might mean. Diana, over to you.
Well, Susie, it should come as no surprise that mortgage finance is front and center for the president. As interest rates are rising, some say credit is the last barrier to full housing recovery.
Our housing market is beginning to heal.
President Obama returned to Arizona, one of the hardest hit states in the housing crash, 4 years after using this desert backdrop to announce his housing bailout. It was part victory lap, part call to action.
We've got to turn the page on this kind of bubble and bust mentality that helped to create this mess in the first place. We got to build a housing system that is durable and fair and rewards responsibility for generations to come.
The president's sights are set on reforming the nation's $10 trillion mortgage market, making the process easier for home buyers and putting private capital at the center of housing finance while pulling government out. That means a gradual wind down of giants Fannie Mae and Freddie Mac, which together with the FHA now back over 90% of all new loans.
I believe that our housing system should operate where there's a limited government role, and private lending should be the backbone of the housing market.
The president's plan to make investors pay up front for a limited, transparent government guarantee of mortgage securities mirrors a bipartisan bill now in the Senate. That bill, put forth by Senators Corker and Warner, so far has the most support of any proposal.
We're really at a critical time for housing finance reform. If they can't get a bill through the Senate Banking Committee this fall, you may be able to write off housing finance reform for the entire Obama administration. In many ways, it's now or never.
The concern is that winding down the government mortgage giants will inevitably make loans more expensive. Low rates have been credited for much of housing's recovery.
The fact that interest rates were so low, it made buying a home affordable for a lot of people.
Now, in addition to overhauling mortgage finance, President Obama called on Congress to allow borrowers who do not have government-backed loans to refinance through Fannie, Freddie, and the FHA. That would transfer risk to taxpayers yet again, though, something Congress is unlikely to do. Tyler?
Diana, I got a complicated doubleheader of a question for you. If Fannie and Freddie stop buying mortgages from banks that want to get them off their balance sheet and thus ensuring a continuous flow of lending capital, who would buy them? And second, you say the president's plan would require investors to pay up for a limited government guarantee of mortgage-backed securities. How would that work and who'd pay the cost?
Well, to start with your first question, it would be investors who would have to buy these loans. Right now, there is a very little private market. There's some in the jumbo loan arena, but for conventional loans, really, it's Fannie, Freddie, and the FHA. So the idea is to get private investors back into the market. That said, the second part of your question is how much would it cost them and how would it all work? Again, you know, the devil's going to be in the details. These are very broad spectrum proposals. There's still a lot going on in Congress, and we don't know exactly how it would work, but we do know that it's going to have to be very carefully done, and there's going to be all kinds of overlays for investors, and it could, critics say at least, make mortgages more expensive by passing those costs that investors have on to borrowers in higher interest payments.
Diana, thank you very much. Appreciate your report tonight.